Good morning, team. Hope we're doing really good today. Welcome back to the channel. Year's over, new year, January 2nd. So time to look back at what went well this year and what didn't go so well this year. But since this is a financial channel, we're only going to talk about finances and like my dividends and how my investments went and kind of what my goals are for next year. If you're new to the channel, I'm Justin. I like to talk about dividend investing, income from options, financial independence, and document my own journey towards financial independence. So if you like these kind of videos, you can like this video and subscribe to the channel if you haven't. I'm trying to put out videos at least once a week. I'm having a little trouble keeping that. I'm steady right now, but I'm not giving up. So let's go ahead and talk about my portfolio. COVID hit, and that did hit me. I wasn't out of work, but my work was cut back a lot for a little while. And right before that, I was taking a couple vacations. I went to a few different places. So when COVID did hit, and it started eating away into my savings right away, because I went to like Hong Kong and Taiwan and I think a couple other places. But I took all those trips, and then COVID hit, and my pay got hit right after that. So it started eating up right into my savings. I didn't sell anything. I didn't sell any of my long-term holdings. I did sell a couple things throughout the year, but that was just because it's time to let it go. And mostly my portfolio is doing fine for the year. And like some of my higher risk income plays, like enterprise product partners, they took a big hit to the share price, but they didn't cut their distributions. And Blackstone Mortgage Trust, which is a mortgage REIT, they took a big hit to their share price too, but they also didn't cut their distribution. So that's really good. And then started selling premium. I got off to a slow start this year. I started just dabbling a little bit in April, but then by around like September, October, I was really putting out allocating a lot more of my capital to wheel strategies. So my income from wheel strategies went up towards the end of the year. Let's look at my spreadsheet and look at my numbers for how everything finished up in December. Overall, all my dividend and my income stocks and shares, that side of the portfolio, that ended the month with $85,518, and that means my dividends are on an annual basis are $2,399.16, with a monthly average of about $200, $199.93. I really want to get this up to $500 a month. I want to average $500 a month in dividends, because that's when I think that's like the magic number for me, where dividends kick in and they do a lot of the heavy lifting on their own. And then it's just a matter of time before you got, a good chunk of money coming in every month. Dividends I received this month, I received, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 dividends for the month. But this GDX was actually a dividend I received because I had it in my options portfolio as a covered call on the wheel strategy. So GDX and Walgreens, these both were paid out to me because I was assigned shares, and they're paid out when I was selling covered calls on them. But altogether, I received $283.92 this month. And for the year as a total, I received $2,302.38 in dividends. And I want to get this up to $6,000 a year, averaging $500 a month. in the near future. Jump over to my options portfolio. The ones that are not highlighted are just things that have been closed out longer than a month ago. So since we're talking about December, the red ones that you see, those have been closed out in December, and the blue ones are still open right now. So I closed out a few of these covered calls that I've been playing with for the past, since August. My XLE, Walgreens, and CVS, I cashed all those out. And then I did all my math. So for my XLE, I originally sold a $36 put on XLE in August. It got assigned and I started having to sell shares. I reduced my strike price to $31 to keep premium coming in to reduce my cost basis. And it got called away, so I walked away with a loss of $117 on that. Walgreens, same thing, I was selling premium on that, but my original strike price was $40 and my got called away for $37.50, but with all my premium, my profit in the end was $36.65. And CVS, my original strike price was $62.50 that I got assigned. Adding up all my premium I received and a $60 strike price getting called away, I walked away with a profit of this $246.90. And on an annualized basis, looking at a 3% loss, 2.2% gain, and then a 4% gain, which 2 and 4% aren't great, but they're better than losing money. And yeah, closed out a couple puts and then opened up a few more puts. And let's go back over here. So I closed out for the month a total of $594.69. That's mine in my pocket. I opened up $836.85 worth of new put contracts expiring in January. And then I sold $448 in covered calls. And altogether, that means adding up all the puts and all the premium I sold this year, but I'm not counting the premium that's still open. I'm not counting any of that in the blue because it's not been assigned or it's not been cleared out yet, because the contracts are still open. So that means I've received $4,268.57 in premium in 2020. And I could up this a lot. I could really do a lot more. I could easily double this number next year because I had that big chunk there, January, February, March, and I think I started selling premium in April. Let's go ahead and go back to the beginning and look at it. I started in April and I only sold 3 positions in April, 3 positions in May, and then I didn't start really consistently selling premium until June. So I can definitely, I think I can double this number pretty easily in 2021 and get $8,400 in premium for 2021. And as like total portfolio size, my options portfolio is up the most with $56,000, and my dividend portfolio is hanging out, about the same as it was last month. Total $141,552.58, and that's up $2,019 from last month. Now I don't have the numbers from the beginning of the year because I'm kind of doing my numbers a little differently, so you guys can see them versus how I keep track of them, in the years past. Like in my years past, I count everything else, like all my cash in my checking account and all that kind of stuff. But I don't count that stuff on these updates. And then like none of my dry powder, I don't have any of that in here either. But I could put another, I think, $7,000 in a I could deploy that money. I have like $7,000 in an old retirement account that I want to move, but it's kind of complicated because some of it is like Roth 401k and some of it's a traditional 401k, and I haven't got around to figuring out the paperwork on how to make sure those go to where they're supposed to go and not get any tax penalties. So not too bad of a year as far as income. I got $2,300 in dividends and then $4,200 in option premium, which would be $6,500 total for the year. I can easily double my option. I think I can easily double. I can double it. I don't know if it'll be easy. I think it'll be plenty easy. I can double my option premium that I'm receiving. And then I would like to work on building up my dividend portfolio and get that income up to $500 a month. Right now, my dividend portfolio is $85,000. I want to build that up. I want to get that over to $100,000, and then start working on building up my options portfolio. Get that above $100,000 too. I can't do both of those in 2021, I don't think, but I think my big focus for this year will be mostly putting my money towards more dividend-paying companies, and I got 3 that I want to focus on building up 3 quality dividend-paying companies that have lower yield, but they have really great growth rates, and I think they can perform really well for the next, 10 years or so. Another thing I would like to do is get my higher level of options clearance and then start selling spreads and like credit spreads, iron condors, and risk-defined and other type of option strategies to capture theta and go more route the theta gain, the tasty trade, the option alpha approach of selling options instead of just doing wheel strategies. Because one thing I worry about the wheel strategy is if stocks go down for a long time, then selling puts and calls on the wheel will reduce cost basis, but you're not actually gonna come out ahead. You're not gonna make money if stocks go down. They're not gonna you're not gonna come out ahead versus something like if you're selling a strangle or a call credit spread where you can make money if stocks go down. So that's all I got for this video. Hope you learned something. Hope you get something out of it, and we'll check in next year, see how everything works out compared to this year. And go ahead and give me a like. I'd really appreciate that. Subscribe to the channel if you haven't. Go ahead and give me a comment down below. Say hi if you would. And then I want you to go have a good day, all right? Justin out.